Welcome to Simple Investing Secrets. In this video, we're going to talk about the top 10 stocks you should own in 2023. Before starting, please do like the video and subscribe to our channel for future updates. It's understandable that many investors don't know where to start because there are literally hundreds of publicly traded firms you may invest in, not to mention the numerous exchange-traded funds, ETFs, and mutual funds you can purchase. Yet, because of the recent market collapse, many equities are currently trading for substantially less than they did 6 or 12 months ago, particularly growth stocks. But which stocks should you buy in 2023? I've attempted to do the next best thing, despite the fact that I don't have a magic wand that I can predict which stocks will yield the highest profits. Here are 10 stocks you should own in 2023. Number 10, Amazon. For the majority of individuals, Amazon doesn't actually require much of an elevator pitch. With around $600 billion in gross retail sales the previous year, the corporation holds a commanding lead in the U.S. e-commerce market, and its Amazon Web Services cloud platform is a market leader here. But there is more room for growth than you might imagine. E-commerce adoption is still far from being at its highest point. Less than 15% of all retail sales in the U.S. are made online. The cloud sector is also a very new one. Amazon also has a huge amount of potential in other sectors, including healthcare, supermarkets, local markets, and more. Number 9, Berkshire Hathaway. This is the least exciting value pick of the group, despite the fact that growth stocks make up the majority of this list. About 60 subsidiary companies are owned by Berkshire Hathaway, among them well-known brands as Geico, Duracell, and Dairy Queen, along with massive stakes in companies like Apple, Bank of America, Chevron, American Express, and Coca-Cola. Berkshire also owns a portfolio of common stocks worth more than $340 billion. Many of these companies were personally chosen by legendary investor Warren Buffett, who at the age of 92 still oversees the majority of Berkshire's investments. The Buffett haters will claim that he has lost his fastball, but despite Berkshire's enormous size, the company consistently outperforms the market. And while Berkshire won't likely continue to outperform the S&P 500 for the foreseeable future, it has done so since Buffett took the helm, returning 3,600,000%. That is not a mistake. Number 8, Disney. The portfolio's all-weather tires are the House of Mouse. The epidemic affected Disney's theme parks and movie business, but it benefited the Disney Plus streaming service, which has developed into a titan year ahead of schedule. In reality, less than 3 years after its debut, Disney Plus has more than 150 million subscribers, far exceeding the company's projected 5-year objective of 60 to 90 million. Disney's theme parks and movies are in greater demand than ever in 2022. In fact, due to initiatives that have increased per-guest spending, income in Disney's parks is currently higher than it was in comparable pre-pandemic eras. Disney Plus has been a huge success in the streaming space, and the business is properly concentrating on growing it as well as other streaming platforms, Hulu and ESPN+. Disney may even be the ideal example of a pandemic-fueled expansion company and a reopening play together, with its incredible portfolio of intellectual property, including the Marvel Cinematic Universe, Star Wars, ESPN, Pixar, and Disney, as well as its cash cow theme park business. It may be the safest stock on this list. Number 7, Intuitive Surgical. Surgery with robotic assistance is preferable to using human hands. Since I became aware of Intuitive Surgical shares for the first time in 2005, this general idea hasn't changed much. The Da Vinci surgical system is the undisputed market leader, and the razors and blades business model enables it to earn recurrent income when medical procedures are carried out using its equipment. As more surgical systems are adopted and more operations are enabled over time, Intuitive Surgical will continue to dominate its market and have plenty of room to expand. This is especially true in numerous foreign areas where the adoption of robot-assisted surgery may serve as a long-term growth spur for this outstanding industry. Number 6, MercadoLibre. MercadoLibre, frequently referred to as the Amazon Amazon of Latin America is one of my preferred long-term stock investments in the market. The business runs an online marketplace with a strong presence in some of the region's most populated countries, such as Brazil and Argentina. But MercadoLibre is much more than that. It also runs a business finance platform, Mercado Envios, a fast-expanding logistics service, and Mercado Pago, a payments network. In the second quarter of 2022, the market witnessed $8.6 billion in goods volume, and Mercado Pago processed more than $120 billion in volume annually, with nearly two-thirds coming from sources outside the company's e-commerce platform. Both are expanding quickly. Don't forget that Mercado Credito, the company's new but rapidly expanding loan division, with $2.7 billion in unpaid loans, Mercado Credito has more than tripled in size just in the last year. Number 5, Realty Income. There is a strong argument to be made that Realty Income is one of the best stocks for long-term investors in terms of value growth and income. If this is new to you, Realty Income is a real estate investment company, REIT, that specializes in buying freestanding, single-tenant retail properties. Some of the top tenants include Walgreens, Dollar General, and FedEx. More than 11,000 properties are owned by Realty Income in the United States and Europe, the majority of which are more resilient to recessions and e-commerce disruption than many other retail establishments. Additionally, Realty Income's triple net lease arrangement contributes to the development of a consistent, reliable income stream. Performance is the ultimate barometer. Since being listed on the New York Stock Exchange in 1994, Realty Income has easily outperformed the S&P 500 with total returns of 15.1% annually. It has increased its payout an astounding 116 times with no dividend reductions along the way, and it has paid nearly 600 consecutive monthly dividends. The current annual yield is roughly 5%. Number 4, Shopify. With a specific focus on supporting smaller businesses and developing alongside them by forming long-term connections, Shopify maintains a platform designed to allow businesses of all sizes to sell their products online. Businesses can subscribe to Shopify services starting at $29 per month, and it also provides a wide range of related services like payment processing options and logistics that make it easier for businesses to run efficiently. Shopify has become a force due to its one-stop shop strategy for allowing e-commerce. In comparison to other companies aside Amazon, it now has more e-commerce revenues coming via its network. Shopify, though, might only be getting started. Number 3, Block. Block, originally known as Square, has developed into a sizable financial ecosystem for businesses and consumers from a specialized payment processing hardware startup. Block provides a variety of complementary services for companies, and during the past 4 quarters, it processed around $188 billion in payment volume on the merchant side. Block offers a variety of services for individuals, including the Cash App, which has 47 million users, as well as direct deposit and debit card services, the ability to buy and sell stocks, and Bitcoin, crypto, BTC, among other things. Moreover, Tidal, a music streaming service, and the Afterpay platform were recently bought by Block. Number 2, Pinterest. In a social media ecosystem that has become more dismal and polarizing, Pinterest stands out as an oasis of happiness that partially stems from Pinterest's focus on ideas. On Pinterest, users concentrate on items rather than other people. People can find visual inspiration on Pinterest for the things they wish to do, whether it be creating their ideal deck, making a child's birthday cake, or changing their clothing. Pinterest has suffered the market fall of 2022, primarily because of a little reduction in its user base after global pandemic limitations were relaxed. Nonetheless, it appears that the user base has stabilized for the time being, based on the company's most recent figures. Additionally, Pinterest has a much larger potential for long-term user growth than Facebook because it has a much smaller user base. Number 1, Etsy. Before the COVID-19 outbreak, Etsy was expanding wonderfully by matching creative entrepreneurs with clients seeking items that were a little bit more unique than typical fare from online retailers. The pandemic saw a dramatic increase in e-commerce, but Etsy certainly took off, expanding at a rate that is more than twice as fast as general e-commerce. The fact that Etsy was a logical fit for consumers looking for distinctive face masks undoubtedly helped, but the site's expansion has been amazing in all product categories. In comparison to comparable pre-pandemic levels, Etsy's marketplace sales volume increased by 141% in the second quarter of 2022. You'll see that I pay attention to strong platforms throughout this list. Without a doubt, Etsy is one of them. Few online retailers can compete with Amazon and remain successful. When Amazon launched its own platform for homemade goods, Etsy not only made it through, it triumphed. So what do you think of the video? Let us know in the comment box below, and please do like this video and subscribe to the channel for future updates.